December hogs were moderately lower and gave back most of the gains that we saw on Wednesday. However, they did still hold within the upward trending channel that we've been in since early January. What the hogs market has done this week is really kind of reset the relative strength index, which had gone from being in an overbought condition above 70% on the RSI to now 57% roughly. Which puts it in a much more neutral position, a much more healthy position at this point. In the meantime, average hog weights are down from last week at 285.6. That compares with last week at 286. Last year at this time 286.7, and the 5-year average at this point of 286.9. So those lower weights suggest that we are more current on marketing, suggesting that we don't have a ton of animals ready to be marketed up front. And that can be a little bit of a positive factor for the market. Again, these are suggestions. It doesn't necessarily mean that, but generally speaking, that's what we look at that, or that's how we interpret the weights. In the meantime, we had our weekly pork export sales number, and let's just say it was not good. It was a net reduction, a negative 14,700 metric tons. It was not offset by an increase in 25 export sales. That was only 200 metric tons. So a fairly sizable reduction. Most of the negative number came from cancellations in Mexico, cancellations with China, and cancellations with Australia. It makes you wonder if this was a one-off week or if this might be a trend. Either way, a negative factor for the market, and part of the reason why I think we were a little bit lower today. Lots to be paying attention to in the hogs market, so stay tuned, everybody. In the meantime, have a great day and you stay safe.